classic question. If all of us could borrow and buy a home right now, how do we make sure that we're managing that debt well, that it's at the right point in our salary? Because right now, banks will give you a loan, but that doesn't mean you should borrow as much as it costs to buy a home in these cities. I want to bring in Gaurav Mashruwala, who is a certified financial planner. Gaurav, thank you so much for coming in. Let's talk about all of the young people who write in saying they want to buy their first home, sometimes in their late 20s. How should they make sure that their portfolios are ready for this big commitment?
First clarity that they should have is that is the house for investment or is the house for self-consumption? If it's for investments, then be careful on a couple of things. One is real estate is indivisible, illiquid and immovable class of asset. And therefore, before purchasing, ensure that your overall portfolio does not get skewed in favor of this illiquid, indivisible, immovable class of asset. Also, if you're going to be borrowing to put in that money, then it's going to be a little risky, because what you are doing is you are saying that I'm going to put my future unearned, uncertain income today. So be very, very careful if it's for investments. If it's for self-consumption, which means you're going to be living there, then probably you're fine going ahead. Just keep in mind two things. One is your overall liability is not more than 50 to 60% of the total assets that you have, and your EMI is not more than 45 to 50% of your take-home pay.
Well, Gaurav, what should we keep in mind before we take a home loan? What sort of a checklist would you like us to have a look at?
Before taking the home loan, couple of things on self-parameters as of what will be the overall percentage of liability compared to assets, how much of the income will be used to service EMI, then the external, then the titles of the property, the surroundings. So complete checkup on the property and your own self, which are other financial goals that are likely to occur while you'll be repaying, because those will have impact on your cash flow. Are you fully insured? Is there enough health cover so that in case while you're repaying the loan, in case there are any ailments or something, there is enough money which is there, or enough insurance cover which is going to take care of your ailment expenses. Apart from that, you may want to look at the external situation as to rate of interest, the kind of lender, property titles, the society that you're going to be living in. All those things also need to be checked. So before borrowing, do certain internal checks and external checks.
Well, how important is a credit history also, Gaurav? Because we all know that young people today have credit cards, but should they keep an eye on that and make sure that their credit history is good before they even apply for a loan?
Credit history is very, very important, because if your credit history is not good and if you're going to be borrowing money, then either you will not get the amount of money or the amount of loan that you require, or you'll end up paying pretty high interest. So just be careful that you have a good credit history, but that you should have it irrespective if you're borrowing or not. If you have taken a loan overdraft in past, you have to ensure that you pay it back on time.
You know, one of the questions that we always receive is from young people who say that, okay, I have a certain amount of money for the down payment. I plan to borrow from family to make up that down payment amount that they need. Should they wait until they can save all of that money on their own? Does it make sense to technically take two loans then? One is the home loan and the second one is the borrowing to make up for the down payment?
If it's house for self-consumption, then even if you have to borrow from family for down payment, it's okay. Then only thing is, in that case, you don't have anything of your own. Your down payment is borrowed and the rest of the money is anyway borrowed. If it's for investments, it's very clear there is no way you're going to take loan for down payment. In fact, I'm also against loan for residual payment, but loan for down payment from a house, from a real estate investment perspective, is complete no-no.
All right, Gaurav, many thanks for answering our questions this afternoon on the show. With that, I'm going to toss it back to Nikunjan Mega.